This is your teacher Haris Bhatt and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve question from AS Level Accounting and the topic is marginal costing. This question has come in May, June 22, 23. May, June 22, 23. So let's just discuss that. G Limited manufactures product at two factories. The company uses marginal costing. State 4 assumption used in break-even analysis. So what are the assumptions in break-even analysis? Number one is this, that selling price per unit will not change. Selling price per unit in break-even analysis will remain the same. Then total fixed cost will not change. Total fixed cost will not change with the change in output. Then variable cost per unit remains the same. Variable cost per unit output के या production के change होने से change नहीं होती. It does not change with the change in the volume of production. Per unit variable cost will remain the same. Then product mix will not change. Product mix will not change. Then units produced and sold are same. Units produced and sold will be the same. So these are the assumptions. State the formula for calculating the margin of safety and sales value. That is actual units sold minus break-even units sold. And then total value sales, total sales minus break-even sales. You will get margin of safety in units and value. अच्छा सेल वैल्यू नीचे लिखा हुआ है so that I have already told it to you. Next question, addition information. At one factory, a single product is made. The following budgeted details are available. Direct material per unit 3 kg at the rate of 5. 3 into 5, 15 हो जाएगा. Direct labor per unit 2 hours at the rate of 9.5. That will be 19. Fixed cost per month 66,000 in total. Selling price per unit 48. Sales 8,000 units per month. Calculate the margin of safety in units. So let's calculate the margin of safety in units. So margin of safety will be actual units sold minus break-even units sold. Okay, so let's do that. We have to calculate break-even. So the formula for break-even units, it is fixed cost divided by contribution per unit. Fixed cost is equal to 66,000 divided by contribution per unit. We can calculate. That is how we are going to calculate. We can calculate it easily. That is going to be 48 minus 15 minus 19. Because 2 into 9.5 is 19. So we can calculate the break-even. Selling price minus variable cost per unit, which is 15 minus 19. So we'll get the contribution per unit minus 15 minus 19, that is 14. Now you can calculate break-even in units, fixed cost divided by contribution per unit, 66,000 divided by 14, that is 4714 units. Yes, 4714 units. That is going to be your break-even units. Currently, we are selling 8,000 units. It means that we are above break-even point by almost 50% or at least 40% because we are basically selling break-even units are 4714. So now you can calculate the margin of safety in units. That is actual units sold, which is 8,000 minus break-even units sold, which is 4714. So how many? What is the margin of safety in units?
3286.
3286. If you multiply these margin of safety units into selling price 48, you will get the margin of safety in value or in total. You can do that also. Next is addition information. The director are concerned that there could be a fall in demand for this product. They plan to make some changes to reduce the product's break-even point and encourage sales. They wanted to reduce the break-even point and wanted to sell more. Use a different grade of material, but the high quality material. The list price of this material is 10% less per kilogram than the existing material. So the price is basically 10% less per kilogram than the existing material. But each unit will require 5% more kilogram of this material. That is going to be an expensive material. More kilogram. So if you just see the data, that is 3 kg into 5. So now we are going to have 3 multiplied by more 5% more kgs will be used. 5% of 3 is 0.15. So now we are going to use 3.15 kg will be used on each unit. And the price will be 10% more than the past. So price is 5. So 5 into 10% is 0.5. So now the price per kg is 5.5. So 3.5 multiplied by 5.5, we will get the new material price per unit according to the improved product, which is using
17.325.
17.385 is the direct material cost per unit. मैं यहाँ पे लिख भी लेता हूँ.
सर ये जो
Yes.
वो है 5 और 0.5 वाला है, ये वाला बताएंगे दोबारा.
वो समय सवाल में हम देखते हैं ना वापस. क्वेश्चन में उसने कहा है कि 3 kg मटेरियल लग रहा है और $5 पर kg है. तो कह रहा है कि अब आपकी जो लिस्ट प्राइस ऑफ दिस मटेरियल है वो 10%, अच्छा लेस है यार, 10% लेस पर किलोग्राम है देन द एग्जिस्टिंग मटेरियल एंड ईच यूनिट विल रिक्वायर 5% मोर किलोग्राम ऑफ दिस मटेरियल. आगे भी कुछ लिखा हुआ बल्कि सप्लायर ऑफ मटेरियल हैज एग्रीड टू गिव ए 20% rate discount. Okay, so we are going to have a 20% rate discount also. So let's do that again. That is not going to be 5.5. Number one is this, that the price will be, the list price rather, will be 5 minus 0.5, that is 4.5, and the supplier will give us 20% trade discount. What is 20% now? That is 0.9. So 4.5 minus 0.9, what is the material price now? Let me repeat it for you again. He's saying that
3.6.
Yes, he's saying that the list price of this material is 10% less per kilogram than the existing material. So the list price of this material is 4.5, and now, oh sorry, 5, and 10% of this is 0.5. So now we are, the price is 4.5, but the supplier is also giving 20% trade discount. So we can take a discount of 20% more, which is 0.9. So 3.6 is the material price. But kg is going to be used more by 5%. So that will remain at 3.15, because 3 into 5% is 0.15, and 3 plus 0.15 is 3.15 multiplied by 3.6. So what is the material price now?
11.34.
11.34. Okay, thank you. Next. Make alterations to machine to improve efficiency at a cost of 24,000. Machine is depreciated at 25% per annum. So there is an increase in fixed cost. So machine is going to be, the depreciation will be there. That is 24,000 into 25% into 1/12. So that will be the increase in the fixed cost, and that is 500. So your fixed cost is now going to be 66,000 plus 500. That is 66,500. Okay, right? Reduce the selling price by 1.5% per unit. So let's calculate. Now, the selling price is going to be, that was 48 into 5%, 1.5%, sorry. What is the amount? Because the selling price will reduce by 1.5%. So what is the 1.5% of 48?
0.72.
0.72. 48 minus 0.72. So what is the new selling price now?
47.28.
47.28 is going to be the new selling price. So 47.28 is going to be the new selling price. Now let's see. That introduces sales commission of 0.5 per unit. So there is going to be a sales commission which will increase our variable cost basically, because this is a variable cost because it is basically attached with per unit. So 0.5 per unit will there will be an increase in the variable cost per unit. Other costs will remain the same. It means that direct labor per unit, 2 hours at the rate of 9.5, that will remain at the same.